Okay, welcome everybody to another QB Power Hour. We are going to be discussing recording prepayments today. Whether you're getting a prepayment from a customer or you're making a prepayment to a vendor. My name is Michelle Long, and I'm joined today with Hector Garcia. Again, that's me, Michelle Long. I'm the owner of Long for Success, the author of several different books. A LinkedIn group is a great resource. If Hector and I can't get to all your questions today, please join us in that LinkedIn group or on the Facebook group, QB Power Hour on Facebook. We can continue the discussion, and you can post your questions and chat with one another out there in those forums as well. I'm also thrilled to be an international speaker for Intuit. I'm very thrilled to have gone across the U.S. and Canada to be able to present QuickBooks to a lot of people. So I'm glad to see a lot of you from Canada joining us today as well. Hector, you want to go ahead and introduce yourself?
Sure. You can pass the slide. My name is Hector Garcia. I work and live in Miami, Florida. I'm a CPA. I'm a QuickBooks Pro advisor. We do some tax work, so it's busy time for us. And I'm a member of the Intuit Writer Network, and very happy to be part of the QB Power Hour as well.
Great. Thank you, Hector. So what we're going to be covering today is we're going to talk about the QB Power Hour, kind of a little bit about it, the CPE process. We've got some announcements and updates, and then the vast majority of our time we're going to talk about recording prepayments. I'll talk about from customers, and Hector's going to talk about to vendors. So about the QB Power Hour, this is a webinar series that we do about every 2 weeks. Our next one will be on March 5th. We always do it on Thursday, but we may have some special Power Hours here and there, so watch for those as well. We get right into the details, and we cover tips, tricks, and advanced insights to help you to learn more about QuickBooks, whether it's the desktop version or QuickBooks Online. We also try to bring in some special guests from some third-party apps, some practice management or Intuit people, and have those come on various times throughout the year. We like to have topics that are interesting to you, so let us know what topics you are interested in. And I would like to know, a fun little poll here. I'm going to go ahead and launch this poll. Whoops, didn't mean to do that. I'm going to go ahead and launch this poll, and I want to know which Power Hour is this for you? Is this your first Power Hour, second, or which one? Somebody says my phone is going to go in and out. I apologize for that. I am close to the microphone, and I'm not changing anything. So I apologize if there's something there. But can you let me know which Power Hour is this for you? Is this your first, your second or third, your fourth or sixth, or have you joined us for all of the Power Hours that we've been to so far? If you can just take a quick minute and let us know which one you're at. Lynn says the poll is not showing. It should open up for you. It might be in a different window. Or if you're on a tablet, sometimes the poll doesn't show. I know it's showing on an iPad because I can see it. But let us know which one you've joined in, how many of these have you joined in. And those of you, I see we got about 7%. It's your first Power Hour. Welcome. Thank you so much for joining us. Glad to have you here. Wanted to let you know, too, that the poll question, you'll get a poll question just like this poll towards the end of the webinar, and that's when you're going to enter your CPE keyword. I'm going to go ahead and close this poll, and I'll share the results so you guys can see. We've got about 7% that it's your first time, about a third of you, it's your second or third, 4 to 6 of you, 47% have been to about 4 to 6 of them, and we got 13% that have been to all of them. That's fabulous. We really appreciate you guys joining us for all these. Hector and I enjoy doing them, and we enjoy having you here. As I mentioned, we will have CPE. Hector, do you want to talk a little bit about CPE and let them know about the CPE
Absolutely.
process?
CPE process is actually quite simple. As long as you're here for 50 minutes, full 50 minutes, and you answer the CPE question correctly when the question comes up, we get a spreadsheet of all the attendees, and we actually filter them out based on amount of time and the fact that your answer is correctly. So we don't nitpick them and go one by one. We just basically export the spreadsheet of everyone that was here for 50 minutes or more and answer the question correctly. There's only about a 1 minute window you have to write down the CPE keyword question, and about a 1 minute window you have to answer it. So if you are in the bathroom or taking care of a client or answering an email or something, unfortunately we can't do anything. You have to answer it in order for us to get that. And that's it. And it takes usually 2 to 3 weeks for us to send that out.
Thank you, Hector. And we always try to say the CPE keywords several times. So it'll be displayed on the screen, and we will repeat it several times. And then on the poll question, too, we will ask you several times to answer the poll question. So I know last time some people missed it, and I'm sorry about that, but we do have to follow the NASBA rules on CPE. Now, also we wanted to make you aware of some of the upcoming events. I'd like to invite you to join me and Sandy Smith-Leva for the award-winning Ultimate Accounting VCon. It's a 2-day virtual conference coming up in May. You can sit in your own home, attend lots of webinars like this over a 2-day period, get lots of CPE, and learn lots of great practical tips to help you to grow your business. Also, Hector and I would love to see you at QB Connect. Last year was the first QB Connect conference, and it was amazing. There you can see Hector and I at the QB Connect. We'd love to have you join us at that. The dates there are November 2nd to 4th, and if you want to go sign up to learn more about it, you can go to qbcon2015.com. And also a couple of announcements that we wanted to give you. The new QuickBooks Online Accountant, we've talked about this for the last couple of months. It was first announced in December. It is being rolled out in phases. You'll know you've got it when you've got the green bar on the top there. That is the new QBOA. And a lot of you are saying, when am I going to get it? You just have to be patient, unfortunately. Once you get that, though, you will be able to put your QBO clients with payroll on wholesale billing. I know that's one of the things people have been upset about. If my client has payroll, I can't put them on wholesale billing. Well, with the new QBOA, you're going to be able to do that. So just hang tight and be a little patient, and hopefully you will get the new QBOA pretty soon. The other big announcement that I wanted to share with you, the QBO Advanced Certification. It's been updated and revised, and it will be available next week. We have spent hours going back through all of the questions and all of the feedback and comments that we've heard, and I think it's better than ever, and I think you guys are really going to love it. So that will be available next week. Now, keep in mind, you have to have the regular certification first for QuickBooks Online, but the advanced certification helps you to get listed higher up on the Find a Pro Advisor website. So it's a good idea to invest the time to do that advanced certification. And unlike the desktop one where you have to wait 3 years, you don't have to do that with the QBO advanced certification. You just have to have the regular certification. So keep that in mind. If you're not a pro advisor, you should sign up. It's free for the QuickBooks Online stuff. You can get free QBOA training, certification, and support. That is free. Now, if you want the desktop stuff, that is paid. You have to pay for the QuickBooks desktop software training and certification. But the QuickBooks Online is free. So if you haven't signed up yet, I'd encourage you to do that. So go ahead and look at proadvisor.intuit.com to get some of that. So if you haven't done that yet, do that, and then watch for that new advanced certification. Okay. The advanced certification training is available right now, so you can go out to your ProAdvisor website and access that. So it is available now. Hector, I'm going to go ahead and mute you or have you mute yourself. I'm going to go ahead and talk about the QuickBooks aspect of recording payments now. We're going to talk about recording payments from customers. That's what I'm going to talk about. Hector's going to talk about prepayments to your vendors. Now, when we're getting deposits and stuff, retainers from customers, what we're talking about here is not like a landlord where they get a security deposit. That's not what we're talking about here. We're talking about like deposits and retainers that you get paid in advance of your work. Like a lawyer, they always charge retainers. Us as accounting professionals, we should charge a retainer. Or maybe you've got a construction client and the job's going to cost $5,000 and they want $1,000 up front as a deposit or as a prepayment before they start doing the work. So that's what we're talking about here. I'm not talking about security deposits that landlords might have and deal with and stuff like that. So when we're getting these prepayments or these deposits or these retainers, different people are going to call them different terms. When we get these from the clients or from our customers, there's different things that we need to consider and how to deal with these. What are the sales tax rules? You need to make sure that you know what the rules are for the sales taxes based on your location, because it's going to be different in every city and state. So you've got to check that out first. Is the deposit or the retainer, are the sales taxes due when you collect the deposit or the retainer, or is it not due until the job is completed? So you kind of need to find that out. You also need to consider, when considering which options to implement here, these are some things to think about, is you should consider the financial statements. Are these financial statements for internal use only? In other words, is it management only? Is it for management purposes only? Or do they have to provide those financial statements to a third party? Do they give their financial statements to a bank every month? Because that's going to make a difference in which one of these options you might choose. You also should think about the materiality aspect. Do they get deposits and retainers on a regular basis? Are they large? Do they only get them occasionally? So think about these aspects when you're considering which one of these to implement. So what we're going to talk about is we're going to talk about these 3 different features, and then I'm going to go into QuickBooks and I'm going to demonstrate them and show you it and talk you through some of that. So the first option, there is a deposit feature that is available in QuickBooks Online only. Now the other 2 options that I'm going to talk about, those 2 options will apply for QuickBooks Online or QuickBooks Desktop. But this first one here for the deposit feature, that is only available in QBO, in QuickBooks Online. So what it is it's where you can enter the deposit directly on the invoice, and I'll show you that in just a moment. Then option 2 is you can actually leave a credit balance in accounts receivable and then reclassify it at year end. The benefit to this is your clients or you follow the normal workflow. You create an invoice, receive the payment, make the deposit for your normal workflow. In this situation, you would go ahead and receive the payment when you get that from your customer, and when you enter that, you haven't entered the invoice yet, so it creates a credit balance in accounts receivable. Now, if you have a client that uses management reports only, they're not providing them to third parties, no banks or anything like this, a lot of small businesses, this option would be okay for them because the owner doesn't have to have their financials on GAAP basis. So the owner may want to just do it the way they normally do. So you may want to leave the credit balance in accounts receivable, but then at year end, for the tax purposes, you do want to reclassify those at year end. Okay. You also need to consider the sales taxes to think about whether you want to do it that method or not. Then option 3 that I'm going to show you, the unearned income method. This is the actual method for GAAP purposes, what you should do. You would set up a liability account for the unearned income, and then you also create a service item for those client retainers. Then you can invoice for the retainer, and then you invoice the remaining balance when the job is completed. So let me just go on into QBO, and let me show you these and talk about how they work. And again, you're going to have to consider which one is right for you given your client situation and given all those things that we just talked about. Let me get into QBO here.
Michelle, while you get into QBO, I didn't want to interrupt you, but the slide, I think something's up with the resolution of the screen, where the slide is not showing the bottom and the left side. So do you have multiple monitors as maybe it's causing this, or can you try to unshare your screen and share it again?
Yeah, actually, I've got this wonderful new computer that's a Lenovo Yoga 3. And yes, let me change my screen resolution for you because it's a high resolution monitor. Whoops. And so that's probably what's causing it. And because we were just on the slides, I wasn't worrying about it too much. Let's go down and see how this works. And what I'm going to be showing you, the rest, like when I'm in QBO, you won't need to see that bottom corner there. Let's see if this is going to help.
I'll let you know. I'm watching you change the resolution, but it doesn't show 100%. So I'm waiting for you to, nope, it's still cutting off.
Yeah. So, okay, I will try one more time, and if we don't get it, then I'm just going to move on because I will keep things in the upper corner, and I can resize my window.
Right, yeah, if you resize your window, that could work. If you resize your window, that could work. But try a smaller resolution. Meanwhile, I'll just pull a polling question up. While you get the resolution in a smaller. And so just a quick polling question here. I just want to find out how many of you guys actually do tax returns and what's going on with your practice. So Michelle, maybe you want to try a smaller resolution, like something in the 1200 by 1000.
but I can't see it now because you've got the poll question up there.
That's true. I can't see it either. Okay. All right. Let me unpoll. We got about 80-something% of the poll. So I'm going to close the polling question.
Oh, that was okay. It was okay because I can just resize the window. That's the fastest thing in this situation, and we'll figure that out.
Okay. Resize it. Make it a little bit smaller. I'll tell you because I'm looking at it now. Can you make it a little bit smaller? No, bigger.
I can see it too because I have my iPad open over here.
Perfect.
So I can see what you guys can see. That's why I keep tabs on you so I know what you're doing. Okay, so let me resize this just a little bit more.
No, it's still cutting off.
Yeah,
it's still cutting off.
You know what? Most of what we're going to be showing is going to be up here in this middle section. So I am watching on my iPad, so I will make sure that what I'm talking about you can see. The things down here when I'm in QBO, we're going to be talking about up here, you know, the main stuff. So let's go ahead and move on. So first of all, we were going to talk about an invoice using the deposit feature in QBO. Let me go in here and let me show you. I have entered this invoice. Okay, so I've got an invoice for the client. We're going to invoice our client $5,000. But we want our client to pay us $1,000 up front. So I'm going to pull up an invoice that I did previously, and all of a sudden my computer now decided it wanted to go slow on me here. I've got this invoice for a deposit customer where I billed them $5,000 of installation. And over here, let me pull it over so you can see it, to make sure you can see this window here. Okay, see over here on the right, down here, right above balance where it says $1,000. So in this method, I create the invoice for $5,000. That's the full amount of the job. I'm receiving $1,000 deposit. Now this is only available in QBO. This is not available in the desktop version. I can record the deposit right here, leaving a balance due of $4,000. Now how does this work? Let's look at the journal behind this. See where it says Transaction Journal under More? Down at the bottom it says More and Transaction Journal. Let's see the journal entry that was made for that. We have accounts receivable. The remaining balance of $4,000 will be sitting in accounts receivable as of the date of that invoice. So that's important to keep in mind is your aging report. Do you want it to show as being due and being aged? Like if it's going to be a 30-day job, it's going to then be showing up as overdue from the date of the initial invoice. So just think about that in your aging report. Then the $5,000 of income for the whole job was recorded on the first date that you did the retainer. So think about that. Sometimes on some of these projects, you get the retainer up front and the work of the job may not start for a couple of weeks or a month. And so these are things to think about. Then the $1,000 that you received for that deposit or retainer, it's going into undeposited funds because you got the cash. It's waiting for you to then deposit that with the other things. So that's how that deposit feature in QuickBooks Online works. You don't have that in desktop. And you also won't see that on an invoice unless you turn it on in the company settings. So you need to go into the company settings and click on Sales on the left side over there. You'll see the Sales tab. So click on the company settings and Sales, and in here see where it says Deposit? That's where you need to click the box to turn on that deposit. So it's important to understand how that works. It's important to consider the aging and the income. Do you want all the income recorded as soon as you do that retainer? Or not. So that's one option. The second option we talked about was just following the normal flow, just following the normal workflow for your clients where they would go ahead and when they get the deposit in, they go ahead and they come up here and they receive the payment. When they click Save, there's no open invoice to apply it to. So in that situation, you have a credit balance that will be sitting out there. So let's just go ahead and walk through this. And let me show you how this option works, and then you can decide. So let's say A, retainer 2, because this is our second option, and we can save that. We received from them payment method. We can put how much, you can put your payment method or whatever you want. Let's put over here how much we received. Let's put in $1,000. Whoops, not 100. We were doing 1,000. We've got $1,000 now in the bottom corner where you can't see it. I apologize for that. Let me pull it over. 1,000, I'm going to go ahead and click down the bottom corner, and I'm going to click Save and Close. That creates a credit balance in our accounts receivable. At year end, we would want to reclassify that. Then when you're ready to do the final invoice for that customer, let's go ahead and click on Invoice. And boy, my computer's being slow today. I've moved and I now have Comcast, and I'm not very happy with it so far, I'll tell you that. I'm going to have to call them again. So now let's do the final invoice, and I'm going to do 100. So we have $5,000 here. So I already received payment. Remember, I've got a $1,000 credit. When I click Save and Close, now if I had turned on the preferences in the desktop version, it will say you have a credit sitting out there. Do you want to apply it to that? For this one, what I would want to do, so in the desktop, you can turn on that preference where it will ask you about applying a credit. So when I would save that in the desktop version, it would say you have an open invoice. Do you want to apply it to that? In QuickBooks Online, I'm going to open that payment up, and I'm going to notice right here, it automatically applied it. It didn't ask me, it just did it automatically. So see, here's the payment. It's automatically applying it to that invoice because I have that setting. In the company settings, I have that turned on to auto apply payments and credit. So it's not going to ask me if I've got that turned on. It's going to do it automatically for me and apply it to that. So keep that in mind, that that will apply the payment that you entered previously that was sitting out there as a credit. It's now auto applying because I have that turned on. Let me show you in the company settings under the advanced settings, automation, I believe it is, or is it under the sales? I'll have to double check. Sometimes I can't remember. Yeah, it's under the advanced automation, automatically apply credit. So it didn't ask me. It just did it because I have this turned on here. So that's option number 2. You enter it, you leave it as a credit, then when you create that invoice, it's going to apply that automatically. And in this situation, you don't report all the income until you do that final invoice, and that's when it's going to show up on your aging report. Now, option number 3 is where you come along and you go into the chart of accounts, and you're going to go in there and create a liability account. You'll see I have client retainers as an other current liability. So you create a liability account. You also go into the products and services. And remember, option 2 and 3, you can do both of these on the desktop and QuickBooks Online. Then you go into your products and services list or your items list. In the desktop, it's called the items. And you're going to create an item or a service item for client retainers, and it's posted to that liability account that you just set up. It's not going to an income account because it's not income yet. It's a deposit or it's a retainer. You haven't earned it yet. So we're going to put it into the client retainers account. Then you need to know for your state, is this taxable or not? Are you supposed to collect the sales tax when you collect the retainer or the deposit or the prepayment? You have to know, is it taxable or not? So you set up the account, you set up the product or service item. Then when you are going to receive that, let's go ahead and pull this invoice up. I already did an invoice for the $1,000 retainer. So I'm going to go ahead and pull that up for you and show you that I create the invoice for the retainer. So I've got a, whoops, I pulled up the wrong one. I wanted to do the other one. Let me see. Which invoice did I need here? I need this one. Nope, oops, I still got the wrong one. I need the $1,000 one right here. Invoice 1039. Silly me, sorry. Sometimes I get going too fast. And I'm going to answer some questions here in just a minute. Hector and I have time for some questions today as well. So here's where, this is the first initial invoice where I'm only getting my down payment, my prepayment, my retainer. I'm only going to create the invoice for the $1,000 that I'm getting. So I've got my $1,000 and it's going into client retainers. Now, instead of doing this as an invoice, silly me, I could have done this as a sales receipt. If I'm getting the money right now, I could have done it as a sales receipt. Or if I'm going to send them the invoice, they're going to pay the retainer, I could do it as an invoice. So initially, you invoice just for the retainer for $1,000. Then When the job is completed, now I want this one, invoice number 1040, tax time there. How appropriate is that? A lot of you are working on 1040s. Okay, so once the job is completed, then you do, the first line here is installation for the full $5,000 for the job. Now this is the key. On line 2, you do that same retainer account, and let me get this smaller so you can see it over here. Let's see if this will show up better for you. On the second line, you put in the minus 1,000 for that retainer. So you invoice the full amount up here. So now we're recording the revenue for the full job. The $5,000 is going to be recorded as income when the job's completed. The $1,000 come out of that retainer liability account. And then this is when your income is going to be recorded based on the date of this invoice. And this is also for your aging purposes. The $4,000 balance due will be aging as of the date of this invoice. So you need to think about some of those things when you're determining which one of these you want to use. So those are some different options. Let's go in and show you now in the chart of accounts. You'll see in that client retainers account, so I'm going to open up the register for the client retainers. This is a liability account. We receive the money, it's unearned income. When we get the $1,000 retainer or prepayment, it goes in initially. So you'll see it there, it goes in initially. Then you'll see the second line where it comes back out when we do the final invoice. So things go in, things go out. You also can reconcile this account and clear things out so that if you've got a lot of retainers and deposits and stuff, you're able to reconcile and clear them out of there so you can only see ones that are still remaining and things like that. You can run reports off of them and things like that. So there's different options depending on the client situation or your customers or depending on the situation, which one's right, it's going to depend, and you can go through, but these are the 3 different options available to you on handling prepayments that you're getting from your customers. Okay, so what we're going to do now, and I apologize about the display problem, but I'm glad that we were able to get through that. Let's go ahead and give you the polling or the CPE question. ICE. ICE is the keyword today, and overnight the lake froze and the poor little geese did not keep the ice open, so now they're trying to make it open up again. ICE. A lot of us have ice, except Hector in Miami where it's 42 degrees doesn't have ice. So write down the CPE keyword. ICE, ICE, ICE. Okay, so write this down, and then at the end, towards the end of the hour, you will get a poll question, like we had some poll questions earlier. You will answer that poll question with the keyword ICE. ICE, ICE, baby. So write down ICE. Okay? So hopefully you wrote that down. Okay, so I will go through and answer some of these questions out here. While Hector is, we're going to pass it to Hector, so let me change it to him, and he's going to now talk about prepayments to vendors. So I talked about it on the receivable side, receiving prepayments, deposits, retainers from your customers, and now Hector's going to talk about it on the vendor side. So Hector, I have passed it to you.
Sure, thank you. Michelle, there were some questions about using delayed credits for customers as a technique for dealing with prepayments. There was some question about that, so take a look at that. That's a pretty interesting question. There was other questions about dealing with sales tax in the process. You know, sales tax in accrual basis or sales tax in cash basis, and how these deposits affect sales tax. So make sure to look into those questions. I answered some of them, but there were some still outstanding questions out there.
Okay. Yeah, and let me just talk for 1 second because
sure.
It's going to be easier to explain some of this. On the delayed credits, so in QBO, you can do delayed charges and delayed credits. And what that allows you to do is, let's say you've got delayed charges, like let's say an attorney is entering their time all throughout the month, and then at the end of the month, they want to create an invoice with all of those delayed charges. A delayed credit would be something where, you know, you've agreed, hey, we'll take $50 off every month or something. I don't know exactly when you would use a delayed credit, but that's more, I don't know that I would use delayed credit for retainers or prepayments or things like that. And as far as the sales taxes go, you have to check with your state on what their rules and what their laws are, because for sales tax purposes, sometimes it's taxable when you receive the money, regardless of if it's a prepayment or not. So for tax purposes, it is income when you collect it, even if you haven't done the work yet. If you're cash basis for tax purposes and your client pays you $5,000 in December and you're not going to do the job until January, if you're cash basis, it counts in December. And sales tax-wise, it may count in December. So you need to double check with the laws for your state and make sure that you understand when sales taxes apply on deposits and retainers and things like that. And it also, you've got to consider, are you cash or accrual? And so I can't answer that because that's going to vary depending on your state and depending on your client. So, okay, Hector, go ahead and I'll answer some of the questions while you're talking.
Okay. All right, perfect. Thank you. Thank you, Michelle. Good job. All right, so just double check, Michelle, that my resolution is okay, that if nothing is cutting off, that you can see the entire screen in full screen. Is the resolution okay?
Yes, it looks great.
Okay, perfect. So what I'll be covering is on the vendor side, and I'll be covering it in desktop. Like Michelle said, some of the stuff that she covered, except for that one deposit box that's in the invoice in QuickBooks Online, that will work the exact same way in desktop. So feel free to give that a shot on the customer side for the desktop. For the vendor side, I'm going to cover 4 techniques, okay? And these 4 techniques are not really meant to be used in combination. They're actually meant to be used one of these 4. So if you are dealing with prepayments to vendors for your own practice or your own company, and or you're consulting with your client about how to handle these, I wouldn't recommend that you teach all 4 of these or you implement all 4 of these. I would say pick one of them and you make use of it. Now, the reason why I'm showing you 4, although you only need 1, is because when you walk into a client's QuickBooks files, you realize clients are very creative to make things work, and some of them that kind of understand accounting end up doing these things inadvertently without really knowing what they're doing, and they end up doing it. So I think it's important to keep in mind that you may walk into something like this, and if you know how the mechanics work, you may be able to troubleshoot it or understand it. Okay, so I'm going to jump into QuickBooks now, and I'm going to talk about handling prepayments to vendors. So the first scenario I'll discuss is under what circumstances we will do vendor prepayment. Okay, so circumstance, let me go into the vendor center. So circumstance number 1 is maybe we're ordering some inventory, and they're asking us to pay up front. Okay, that's the most common scenario here. So I'm going to create I'm just going to do a prepayment and then create a bill later. So I'm going to use the first technique, which is vendor A, and I just want to show you here that there's no bills created for this vendor. So I'm going to go ahead and just go to write check, and I'm going to create a payment to this vendor for $10,000. So let's say $15,000. Okay. So what I need to do is, in order for me to apply this to a future accounts payable, so this is something that's going to go into an account that allows me to apply it to a bill later on, I have to use the accounts payable account. But here's the kicker. I'm using the accounts payable account, and this very sort of nonsensical way, I have to come here where it says customer job, and I have to put the vendor's name, right, which is kind of counterintuitive because you would expect to put a customer's name there. But the only way QuickBooks allows me to write a check to a vendor and use the accounts payable account is actually to put the vendor's name here, right? And then on the memo, I'll typically like to do something like, prepaying bill number 123 coming in March, or something like that. So I would put a comment in the memo side. I would put something like this to just kind of give me an idea. Now, I can make the prepayment a wire transfer, and then if it's a wire transfer, I'll just type wire up here. Okay, if it's an actual check number, I'll put the check number, whatever it is, right? So let's say I'm prepaying with a wire transfer, so I'm going to put here a wire, and then I'm going to hit save and close. Now, the effect that writing a check to a vendor using the accounts payable account that it has is that it's going to create a negative accounts payable. So when I go into my balance sheet and I take a look at my accounts payable, this is now a negative number. So that being said, right, accounts payable being a negative number, in this case, is not a problem. You know, a negative liability, it's actually an asset. Okay, and we're going to talk about, putting it into some sort of prepaid vendor account or something like that. Also, to remove some of the confusion, I'm going to delete some of these other transactions I have here that don't need to be here. So I'm going to get rid of them. That way in our balance sheet, we're strictly just looking at that particular item. So this is what I wanted to do. Just wanted to take a look at this one accounts payable for $15,000. So then when it comes to creating the actual bill, whatever the bill may be, so I'm going to go ahead and create a bill now. And I'll create a bill. Let's say this bill is for $30,000. So I'll put here $30,000. And this happens to be $30,000 worth of inventory or whatever it is. For the time being, what I'll do is I'll just create an account here called inventory. And this is not correct, though. I actually have to use the item. So just for the heck of it, I'm using this account here just to kind of illustrate the $30,000. So I'm going to put $30,000 up here, $30,000 up there. That's the actual bill amount. That's how much money I owe to my vendor ultimately. However, I only pay them $15,000 the second time around because that would be the other half. So I'm going to hit save and close. And then what will happen is when I go back into my vendor, now it's showing positive $15,000, which is the correct accounts payable. However, when I go into a report, and I'm going to go, for example, into a report and look at my unpaid bills report, the entire bill shows as unpaid for $30,000. I'll make this font a little bit bigger here. The entire bill shows for $30,000, but there's also sort of an outstanding check for $15,000. So my total vendor balance is showing correct. Unfortunately, my entire bill is showing open. So the way to fix that is I'm going to go into vendors, pay bills, and then in my pay bills window, it shows my one bill for $30,000. But when I select it, I'm going to see the system's going to prompt me to pay $30,000. However, when I look down here where it says set credits, it actually tells me that there's a prepayment into this vendor. So when I click into set credits, then it gives me the opportunity for me to pay this. Now, the challenge with this is that the reference number in this case is wire. So if there was multiple prepayments to that vendor that I'm going to show you, I'm going to go back to that for a second because I want to show you the effect that has. Let's say I have multiple prepayments to this vendor. So I'm going to create multiple prepayments to these vendors with different amounts, for example. And I'm going to show you what the challenge is whenever your customer is dealing with a vendor that maybe they're going to have multiple prepayments and multiple bills, and they want to apply all these things correctly. So I'm going to go ahead and create 3 prepayments. I'm going to just choose different amounts here, and I'm going to put different bill numbers or let's say PO numbers, and I'm going to show you what the challenge is here. The challenge is I created 3 prepayments for this vendor, right, using this check to accounts payable technique. And when I go pay my bill, and I select this, and I come down here to set credits, the challenge is I'm going to see all 3. The problem is I can't tell which one is for because the only reference number that I have here is this word wire. So this is a challenge. I can't have QuickBooks show me a memo or something like that, which is a big problem. So a technique that a customer of mine actually taught me, they did this being creative, is what they'll do is they put the PO number as part of the reference number on the actual check. So I'm going to show you what that looks like, and that gives you an idea for how you're going to do these later. So for example, here where it says wire, they put after wire the word, for example, PO 124, and they know this is tied to PO 124. So I'm going to hit save and close, and then I'm going to go into maybe the other one here and put here PO 126, whatever it is. So even though I put as a reference here, it's no good to me. What's useful is to put it up here. So as I do that, when I go now pay my bill, so I'm going to go to vendor, pay bills, and I select my vendor bill and I click on set credits, now I have a reference point. So that's a very interesting technique. I learned this from a customer of mine actually. The other interesting point here is that how do I know on bills, I typically don't have the PO number on the bill. I have a bill number. So when I actually get my bill from my customer, I'm going to go back and open up this bill. And I'm trying to go in depth. We're trying to go in depth in this one topic by itself, right? So, so let's say my actual bill number from my customer, from my vendor, sorry, it's some weird number like this, right? 344324. So when I go pay my bill, so I'm going to go back to pay bills again. I'll go to vendors and pay bills. I see my bill is 423424. Connected and click on set credits, I only have a PO number as a reference. So the way to solve this problem is when you create a vendor bill, in this case, I'll go back to my vendor bill, it's put your vendor's invoice number there, but then right after put a space and then put the original PO number, which would have been the same reference point you would have used when you prepaid. So when I do this, and I go back to pay my bills, so I go to vendors, pay bills, and I have multiple prepayments towards that vendor, and I'm trying to figure out which one, I can actually match these up. So I can see, oh, that payment for PO 124 is for my vendor bill 124. So then at that point, I know which one I'm going to use to prepay, hit done, and at this point, I can either pay the $15,000 or I can leave it in accounts payable. So if I want to just apply that payment and leave that in accounts payable, I'll put a 0 here and then hit pay selected bills. And that takes care of that particular technique. I'm going to jump into a different technique, which is going to be using vendor credit. This is kind of an interesting one. This is creative. Again, this is stuff that I end up learning from my clients sometimes because they're getting creative. So let's say same sort of scenario. This is a PO for a $25,000 bill for the future, and I want to have that prepayment in there. So another way of doing this is to create a vendor bill, or a vendor credit, sorry, which comes from the bill. So I'm going to go to New Transactions, Enter Bills, and then up here, very slightly hidden in here, there's a little radio button that says Bill, and next to it says Credit. So I have to change this to Credit, and this will actually create something called a vendor bill. A vendor bill credit, sorry. So with this vendor bill credit, I'm going to go ahead and I'm going to make a $10,000 prepayment. I'll use the same technique here. I'll put here PO 199, whatever PO we're referencing to. But what I have to do here under account, I have to hit my bank account directly. So the way I debit my bank account, the $10,000, and credit my accounts payable or my future accounts payable vendor credit is by hitting my bank account here directly. Now, this is not for the novice. It's very dangerous to be using a bank account in a bill scenario and a bill credit scenario because it's difficult in context to understand exactly what's going on. But this would be a way to hit the bank account for that $10,000 payment and be able to credit my vendor. So I'm going to hit Save and Close here. And then I'm going to go into my check register real quick to show you what the effect that was for the bank. So here's my payment, as you can see it here. There's my payment, and you see the transaction is a bill payment. So that's the payment coming out of my bank, right? There it is, $10,000. And that's how I know how my banks were affected. Let me just delete this one test I had done here earlier. So there's the $10,000. And this is the one that we're focused in right now. So then when it comes down the time to create the bill, I notice that the prepayment is there showing as a negative accounts payable, which is fine. It's still kind of fine for the time being. When it's time to create the bill, I'm going to go ahead and just create a regular bill. Okay, and then for whatever it is that I'm buying, right? In this case, I'm using inventory asset as an example, which again, I know that could be all kinds of wrong because you're supposed to use an inventory item, but this is just the example I'm putting together. So then this bill's $25,000, and I'm going to go ahead and put my vendor's reference number for my bill, but then like I said before, I'm going to put here PO 199 because that will help me apply the credit later. So I'm going to go ahead and hit Save and Close. And then I'm going to go back to vendors, pay bills, and I'm going to have now my two open bills here with the POs next to it. So I'm sure that some of you really appreciate this little PO trick because, trust me, when I first saw this, I thought this was genius. So when I click on the little check mark here to select the bill, and then I go down to Set Credits, same token. I have my PO, my prepayment to my PO number as a reference here. I can select it, hit Done, and then at that point, maybe I want to pay the rest of the balance with another wire transfer. So I'm going to come down here to Assign Check Number, which another really crazy thing is, why does QuickBooks say assign check number for something that is not just for check? People get confused when they're trying to pay with a wire or something. None of these really actually make sense. This is why QuickBooks should make this word method check. This should say check/bank debit, right? To make the person say, oh yeah, that's checks and bank debits. But so I'm going to click on Assign Check Number, hit Pay Selected Bill, and then I just click Wire here, and then I hit it Done. And that's how I manage prepayments to future bills using those two techniques. The other technique I'll show you, and this is kind of an awkward one, but it does kind of work, is using this bill payment check technique, and I'll kind of show you how that works. So the first thing I do is I sort of create a tentative bill. So I'm going to go to enter bills, and I'm going to create a bill for, let's say, $12,000. So I'll create a tentative bill for whatever it is that I'm trying to prepay in the future. So this is my tentative bill, $12,000. I don't know my bill number yet because I haven't received it from my vendor. I'll put the original PO number, whatever it happens to be. And then what I'll do is I'm going to go to vendors, pay bills, and then I'm going to select that one bill that's there, and I'm going to make a part of this bill. So let's say this is $6,000, and this will just be a regular check coming out of my bank account. So I'm going to click Assign Check Number, hit Pay Selected Bills, and then whatever my check number is, and then I hit OK. Now, however, this bill shouldn't exist yet. However, there's my bill, and then there's my partial payment. That's why the system still tells me that I owe my vendor $6,000, but in reality, I should have a negative $6,000 there. So once the bill payment is created, so I'm going to show you I have a bill and I have the bill payment, I'm going to go back into that bill and I'll just delete it. This sounds kind of silly, but this is how it works. So once I delete this bill, my bill payment check stays open, which is basically the same thing as a check pointing to accounts payable. Once I double click on it, notice that no bills are checked. Okay, so next time I create a bill, so let's say this is the prepayment. Next time I go ahead and create a bill, and this is kind of an awkward technique, but some people use it, and it could be useful. So once I create my actual bill, whatever the bill happens to be, I'll create my actual bill, and whoops, should be the other way, 12,000, and then whatever my bill number is, and I'll hit Save and Close. When the actual bill comes in, I'm going to have the same situation. I'm going to go to Vendors, Pay Bills. I'll select my supplier, and then I'll have that credit. I'll go to Set Credits, and then I can select it there. The other thing I like about this particular technique is that you actually don't have to go in the Pay Bills window because you've already done it beforehand. So I'm going to cancel this, and I'll just show you. I can just go into that bill payment that was originally created to pay the bill that I deleted, and I can come in here, and then in here I can use the check mark. Now, it's too bad that I can't create bill payments in QuickBooks without having to go to the pay bill screen, because I would love this check to be kind of the essential example for making prepayments. But this technique only works by going through the pay bills window, because QuickBooks doesn't allow you to create this transaction without it being an actual bill being paid, and then you have to delete the bill. So I hit Save and Close, and that takes care of that. So that was writing a check with accounts payable. I covered that. The credit memo approach, I covered that, and the bill payment approach. Now, I'm going to talk about the prepaid item, which is the last example here. So the prepaid item, this would be the true correct way of doing these things accounting-wise. It is a little bit confusing to customers, I think, to our QuickBooks clients, but it is the best way to be accounting-friendly with this technique. So the way basically we do this is, we'll make a prepayment, we'll write a check here or something like that. We'll write a check, but then we're going to use an item. And then we're going to create an item. I'm going to go to Add New, and then I'm going to create another charge, and I'll call it Vendor Prepayment, something like that, right? And then this Vendor Prepayment item is going to point to an account, which in this case should be an asset. Okay, so I'm going to create an account called Prepaid Vendor Payments, and I'm going to make prepaid vendor payments a other current asset. And this is the correct way to manage customer prepayments from an accounting GAAP perspective. So this will be prepaid vendor payments. We'll hit Save and Close, and then we'll hit OK. And then let's say, for example, this happens to be an $8,000 prepayment. Okay, so I'll put my $8,000 prepayment to vendor payment. I'm using a check. This could also be a wire transfer, whatever the payment is supposed to be. And then I'll hit Save and Close. And then just for the heck of it, I'm going to choose another vendor, and I'm going to do the exact same technique here, because I want to show you how to manage multiple prepayments from vendors. So I'm going to use the same technique here. What's it called? Vendor prepayment. And then this vendor I happen to be prepaying, let's say, $4,000. And then I'll put $4,000 here, and then I'll hit Save and Close. So now I have two vendor prepayments that should be in my balance sheet, and that's really what I want to show you. So I'm going to go into the balance sheet here, into the company financial balance sheet, and then I'm going to show you there's an asset here for prepaid vendor payments. The challenge here is that I don't know who of my vendors this money belongs to. So when I double click on this number, in this particular case it's easy to identify because it's just 2, but when you manage a lot of them, what you may want to do is, and I'll go back in my balance sheet, I'm going to double click on that number, and then I'm going to come up here where it says total by, and then I'm going to hit vendor. And what this will do is this will actually create an internal tally of all my prepayments by vendor. And at this point, I could memorize this report, and I can call it vendor prepayments or something like that, and I can save that, and I can also add that to my top icon bar, something that's a lot of people don't know it's there. But here on my top icon bar, what I do a lot is when I have reports that are being often used, like a vendor prepayment report, that would be a report that has to be monitored and looked at actually quite often. So what I do is I come into my icon bar and I get rid of all these crap, for the lack of not using a better word, but I'll get rid of all this crap that I don't need here. I leave this empty space, and then whatever report is that I just memorized, I come up here and go to the view menu, and I click on add vendor payments to icon bar. So what this will do is it will now add a nice little icon that the customer, for my clients, is, some of my clients, is too complicated for them to go into reports, memorize reports, vendor prepayments, and something as important as a vendor prepayment report, I think it should be right up here, because it has to be sort of managed manually. So when they come up here, they see the report and they say, oh, okay, vendor X has $8,000 of credit in their favor. So when it comes down to actually creating the bill now, so let's say it's time for me to create the bill for vendor X, and one of the real positive things about this is I don't have this weird negative accounts payable that we were seeing with all the other techniques. So this will be the most accounting friendly, but not so user friendly. But then the way this will work is, let's say it's time to create the bill, whatever that bill is. So I'll create the bill here, whatever the item is supposed to be, and let's say this one is, let's say 16,000. But then the key here is that in order to make this bill the actual current accounts payable balance, is I go back here where it says items, and I used vendor prepayment. And by doing this, I actually use a negative value of 8,000, and this will work, right? Because with a negative value of 8,000 on one side and a positive value of 16,000 on that side, it would actually render a current bill amount, which is actually what I owe my vendor, of 8,000. Okay, so I'm using the item technique, which is necessary if you're going to include it in a PO. However, some people say, Hector, why would you even go through the item where you can come in here on the expenses tab and use prepaid vendor payments? And actually, that's okay as well. I can do that. That should be no problem. So if you prefer to go straight into the account itself and hit that account, that will work the exact same way. The reason why I showed you with the item is because sometimes people would like to put that in the PO before creating the bill. That way, when the bill gets created automatically from that PO, that item comes in, and then you don't have to worry about remembering to put it in there. So that's why I'm showing you both techniques, with the item and without the item. So after that is done, we pull our vendor prepayments report, and we're actually able to see that vendor X is completely settled with their prepayments. All right, that's actually it for me. So I'm going to open it up for some questions, and I'm going to pull up the polling question. So Michelle, okay. I'm going to pull up the polling question now, and then I'll have you ask me some questions. I'm sure there's a few questions.
Okay, I went ahead and launched the poll question, and so if you haven't been paying attention, please answer the CPE poll question. Hector, I'm going to ask you some questions. So one of the questions we just had was, can you create this icon if the client is billed for their QBO and not ourselves? I wasn't paying attention, so I don't know what icon you created.
Did you say QBO? That confused me itself.
Yeah. So first of all, did you create an icon on their icon bar, a shortcut icon?
Yeah, sure. So what I did was I cleaned up some of the extra icons that were there, and I left some empty space. And okay. right when you close the polling question in about 10 seconds, I can go back and show that. So the polling question has been up right now for about 50 seconds, and we only have 83% of the votes in. So anybody that still needs their CPE, please come in and answer their CPE question because we're going to pull it in about 2 seconds.
No. Hector, let's give him another minute or so.
Okay.
Okay.
So sure, I can't show it on the screen because the polling question's up, but I created the icon in QuickBooks Desktop. And if there's a question about how to do this in QBO, really you can't. This is only a desktop technique. So Michelle, if you remember your QuickBooks Desktop days, I went into the View menu and I click on Add the report into the icon bar, and I basically created an icon in the icon bar that goes straight into the memorized report.
Okay, and so yes, and so what I was wanting to say about the QBO is I create shortcuts and create my own icon bar as a bookmark bar, and somebody asked about that. I posted the link, the bit.ly link, where you can see how to do that. I have a YouTube video that shows you how to do that. So you can create some bookmarks instead of icons in QBO, but it doesn't have anything to do with the billing and the wholesale billing on whether you can do things or not do things, whether they're a wholesale billing client or not. So I don't think that really matters there at all. So then, Hector, here's another question that somebody had that you talked about that, about using items instead of the expense tab. But somebody also said, where was it here? When Hector set up the prepaid expense, you use the other charge item. Would a prepayment item work as well? So do you want to clarify that?
Sure. The payment item, and I'm going to close the polling question so I can pull that up. That was up for 2 minutes there. So what they're referring to, and I'm just going to put some context here. When I go create the item, and there's one called payment, this payment item only works for customers. So if I use the payment item in a vendor bill, the system will just send me back out saying, listen, this item doesn't work in a bill. So there's no way to use this item in a bill context. It's only for customers. So that's the short answer to that question.
Okay, and what form did you use to create the prepayment, the step before creating the bill?
Well, the prepayment is money coming out of the bank, right? So I used a check, right? So I paid it with a check, right? Wire transfer, check, whatever. So I used a check, so I'll go back and show that. So what I used to make that prepayment is, this was just a regular plain vanilla check. I was either hitting the prepaid asset account, right, which is the correct account that it's supposed to go to, or I was choosing that item that I created that hits that account. So it was just a regular check.
Okay, and then another one that's an interesting one is, when you delete that, where did it go? When you delete that, does it cause any data integrity problems? You deleted a bill after applying it. Is that going to cause data corruption issues because there's no link anymore between the bill and the bill payment?
So for me to say something doesn't cause data corruption, it's sort of a big responsibility because potentially anything you do can cause data corruption. However, for my personal understanding, deleting a bill with an unapplied payment will not create data corruption. However, it will just create a problem with your balance sheet will be off because you have a payment that's unapplied. But that would be the same thing as having a check pointing to accounts payable. It's the same exact thing.
Yeah, and as far as data corruptions, one of the biggest culprits of that is people who try to use QuickBooks Desktop on a wireless network. I know that causes lots of problems. But you know what? With QuickBooks Online, we don't have data corruption issues. Okay, so we have lots of great comments from everybody and lots of good feedback from you guys. Hector, I thought you did a fabulous job. You want to go ahead and put our last slide up there? I went ahead and I posted some links for everybody to our link to the LinkedIn group and our Facebook page. So I'd love you guys to join us out there and let the questions continue and the discussion and everything. It's a great opportunity to network with one another and ask questions in between our QB Power Hour webinars. Hector, any last comments?
The only thing I would say is Michelle is very active in the LinkedIn group, so I recommend you join it and join the conversation. If anything that you liked about this webinar or something that came that you didn't understand, post a question there. Maybe one of us will answer it, maybe another user will answer it. And the Facebook group, we just started that a couple weeks ago, and it is getting a lot of traction. I personally, not to pick sides or anything, I like working with the Facebook group because the Facebook app is so easy on my phone for me to just answer questions and add comments. So I'm typically answering a lot of questions in the Facebook group, and Michelle's doing stuff in the Facebook group too, but Michelle's been so active in her LinkedIn group, so a lot of times I spend more time in the Facebook group. So I will tell you, don't pick one, just join both, and then every once in a while join the discussion, because we have really interesting discussions there. The SurveyMonkey link is there. You're going to get that on the email. I wanted to show you in the Facebook group, we put a polling question. Every once in a while, we're putting polling questions about what kind of topics you would like to see. You like to talk about practice management, or would you like to talk about specific apps or PayPal or whatever. So get more involved with these groups, because it allows us to build this webinar that's tailored to you. One of the biggest feedbacks we received is we want you guys to do less topics and go more in depth on one specific topic, which is the example of what we're attempting to do today. We're trying to just focus on prepayments. So as more feedback that we receive, the more we make this webinar tailored to you, the viewers. So that's it. That's all I got to say about that.
Okay, and leave that screen there real quick, because somebody asked how to join the Facebook group. If you'll notice up there in the top, see the picture at the top? Hector, if you just scroll up some.
Okay.
If you look for QB Power Hour, or find Hector and I, you can see there the join on the bottom right corner of that picture on the heading. See where it says join?
I'm going to log out. I'm going to log out of it, so to show you what it would look like if you're logged out of Facebook or something. What you do is, so once you log in, yes, Michelle.
Go ahead.
Yeah, I was just going to say, once you log into the Facebook, whoops, now I got to make sure my Facebook password is okay. You come up here with a search up here, and you literally put QB Power Hour. That's literally what you do. You do QB Power Hour, you search it, and if you're not part of the group, there will be a button down here that says join. And then once you click on join, we will manually accept you, and then you can be part of it. And it's similar to the LinkedIn group. I don't know if you want me to show that too, Michelle, but that's pretty much the process.
No, that's okay. Somebody else asked for us to share the poll results on the tax question. So I'm going to go ahead and click on that and share with you. We had 28% that said yes, and I'm crazy busy right now, and they probably already left.
That's true. That's true.
Yes, they're not too busy. 41% said no, and I'm really glad, and I would be in that category. 10% no, and then 3% said, what are taxes? So we have some jokesters in the group too. Okay, so you guys were great for joining us again today. Thank you all, and we'll see you in LinkedIn and Facebook, and I hope everybody has a great day. Thanks, everybody.
Thank you very much. Bye.
Bye.